After a steep drop in oil prices caused by the Kremlin's refusal to at least name an approximate timeline for its official response to the Russian oil price cap, the market is standing still. The quotes are hovering around the $80 mark, with no signs of a move in either direction. Obviously, only a statement on the retaliatory measures of the Russian government can budge the market. Apparently, Moscow is in no hurry to take action. In such a case, we need to remember what had happened to the market before the rumors about Russia's possible steps appeared. At that time, oil was steadily declining, so if there are no specifics on this issue in the next couple of days, the asset will head towards $75 per barrel. In the meantime, the trading chart shows that Brent crude oil futures have slowed down the upward cycle around $83. As a result, the asset entered a sideways range, but then reversed and settled below the 80 mark. If the quote fixes below this level, sellers will most likely keep dragging it down. Alternatively, oil may resume gains if the quote returns above 81 on the forward chart. Meanwhile, the issue regarding energy demand should inspire optimism. Thus, the Chinese authorities have promised to increase energy consumption. Bullish sentiment can also be reinforced by the news from the United States. The Biden administration is now buying 3 million barrels per day at a fixed price to replenish U.S. emergency reserves that officials drained earlier this year in a bid to counter a sharp rise in energy prices. At the same time, fears of a global recession continue to weigh on commodities markets as major central banks intend to further tighten monetary policy. As for gold prices, the meetings of the Bank of England and the European Central Bank helped the asset come close to $1,800 per ounce. According to the trading chart, gold is trading sideways in the range limited by the levels of $1,825 and $1,775. However, the current stagnation isn't expected to be short-lived and can be seen as an accumulation process. Then the price is likely to gain momentum and get out of the sideways range. At the same time, upside potential seems to be exhausted. This can be confirmed by Friday's trading, when the market was standing still regardless of extremely downbeat macroeconomic data from the United States. Gold failed to advance despite its inverse correlation with the greenback. Apparently, the market just needs a driving force, which could help the dollar gain and push gold prices down. But today's macroeconomic calendar is almost bereft of any important releases, so investors will have to be guided by political factors, which in turn are difficult to predict in the short and even medium term. Now let's get back to what we began with. A delay in responding to the Russia oil price cap and the outcome of the Bank of Russia meeting contributing to a weaker ruble. As for the first point, everything is clear. This convinced investors that Russia has probably come to terms with a price cap and the resulting drop in revenues. Although the Bank of Russia left the key interest rate unchanged, the regulator made it clear that it would continue to ease monetary policy throughout the next year. This is a negative factor for the ruble. Against this background, the dollar has already approached the level generally followed by reversal and a move towards 60 rubles in the recent months. And this time there are no preconditions for a trend change yet. Thus, there is a likelihood that in the next couple of days the dollar will rise up to 70 rubles per dollar, the highest level since early May. However, the situation may change dramatically once Russia provides its official response to the price cap. This event will almost certainly lead to a reversal and steep gains in the Russian currency. From a technical point of view, the US dollar has settled above the level of 65 rubles for the first time since late May, which is a dramatic change in relation to its 5-month sideways movement. The first control level has already been passed. Now, buyers need to overcome 67.5, the local high posted on May 27. If the price consolidates above this mark, the way to the level of 70 will open. An alternative scenario will be considered by traders if the price fixes below 64 rubles on the daily chart. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.